All right. Good afternoon. Can everyone hear me? We good?
Yes, we can hear you.
Okay, perfect. All right. So I want to welcome everybody to Intro to Finance. This would be the introductory course to everything finances. And so today we're going to be covering financial management. So we're going to go straight inside the meeting and we're going to go and actually kind of get an introduction from everybody. Let me know where you're from and kind of if this is your first time in a finance course, so we'll know how quickly or how slowly we need to walk through the courses. There are tests, there are, what do you call it? There are tests, there are homework, there is homework, and there's a midterm. So the midterm, let me come out of the gate and say that the midterm is scheduled for February 27th. So the midterm is scheduled for February 27th. And you'll have tests and homework in between. All right. So just wanted to kind of clear that out. So we'll just start with anybody on the call. We can get an introduction of your name, if you're from a financial institution where you're working, and also if this is your first time having a sitting in a finance course.
Good night. My name is Kendra Jones. I'm employed at RBC, and yes, this is my first time in a financial course.
Okay.
Good evening. My name is Cardia Cox. I'm employed at Fidelity Bank. This is not my first financial course. I'm also currently enrolled in UB in the accounts program. I've already done a few financial courses.
Good night. My name is Brene Bain. I'm employed at RBC. And yes, it's my first time as well.
Good evening. My name is Rashay Barr. I'm employed at a private medical facility, and this is my first time in a financial course.
If you're speaking, you're muted. I can't hear. Is it on?
Sorry. We good
only
now?
me? Oh, yeah, I
No,
can
you're
hear
good.
now.
All right, good. So spoke with Ms. Dean. She indicated that this course is fully online, but we also wanted to give the option if you would prefer the class to be in person. Are you a better learner in person? or we're just going to continue everything online, tests, quizzes, homeworks, midterms, final exam, just purely online? What is the I guess consensus from everyone in the class?
I mean, fully online is okay for me.
I don't mind online, either one, to be honest, but I'm okay with online as well.
Same for me. Both is fine. Online is just as good.
Online is fine for me.
Right, so online it is. Okay, so we won't need to be, well, I'll at least try figure out a way to kind of write on the on my laptop. Well, not on my laptop, my tablet. Okay. Another thing with online, the preference is also, if we are going to be online, then if we can kind of, it may be a little late and persons may not be up to it, but we will be using the videos online. All right. So if we're going to stay online, we're going to prefer that you use your video so that we could kind of have that engaging process. Because based on the previous onlines that we did, persons would kind of, not be stationary, not be focused, not be functional. And so it would kind of hinder everyone else in the course. So if you can, we can start tonight with the cameras on, and then we can proceed with the class. I will share my screen. My basic method of teaching the course is interactive. So you can stop me at any time during the class, anytime during the lecture, and I'll be happy to explain anything to you. A little bit about myself. My name is Dino Cartwright. I'm employed at Cloud Carib, which is a managed services company. We offer backups. We offer not only backups, but we offer things for government, banks, financial institutions, healthcare facilities, and we offer more or less alternative methods for them to ensure that their information is safe. So we're in information security. I work as the compliance manager there. Prior to that, I was at the Scotiabank in compliance. Prior to that, I worked at Central Bank of the Bahamas as a regulator. So the benefit of the course is that you would get to kind of get someone who is working in the banking sector with you, as well as someone who works in the regulatory sector and also now in compliance, so that I can kind of give you a bird's eye view of what is expected of you. The course is the tests and everything are already made up, and so they won't change much, but there would be some homework assignments that you would have that would help you to better understand the local economy, that would help you to understand what's going on internationally. And then this homework would also help you to be able to be relevant concerning what it is that you are studying. All right, so we have any questions so far? We good? Clear as mud. All right, if all hearts and minds are set, you can let me know when you can see my screen. Another thing, do we have everyone here? Did everyone get a chance to log into Moodle?
Yes.
Yeah, I got a chance.
Okay, so Moodle is where you would see homework assignments and everything like that. Everybody got a chance to got the message in Facebook, right? Not Facebook, sorry. Got the message in WhatsApp, so that is essentially how you would be communicated with as it relates to what is due. If there was a fly-by-night quiz that you get, please pay attention to your WhatsApp group. Don't put it on silent. Don't put it on mute notifications, because you may just miss the course. Up to now, we have had a 98% pass rate of the course, so we're expecting to maintain that momentum as we continue with this course, and so we're not expecting anybody not to pass the course. Okay, Cardia, are you in the WhatsApp group? Let me see.
No, I don't think I am.
No way.
Text.
Okay, so if you could probably private message your contact to me, and
Okay.
I will add you to the group.
Okay, thanks.
Yes. Okay, and Rashay also said that she doesn't see the e-textbook. All right, so I will get a way to add that e-textbook to you. Or at least I'll send the messages as well. And you'll see, okay, you won't be too far behind. All right, so financial management, this is our first course, financial management. The learning objectives for this first class: describe the cycle of money, the participants in the cycle, and the common objective of borrowing and lending. Number 2, to distinguish the 4 main areas of finance and briefly explain the financial activities that each encompasses. 3, explain the different ways of classifying financial markets. 4, discuss the 3 main categories of financial management. 5, identify the main objective of the financial manager and how he or she might meet that objective. Number 6, explain how the finance manager interacts with both internal and external players. 7, delineate the 3 main legal categories of business organizations and their respective advantages and disadvantages. We're going to talk about the agency theory and the principal agent problem, define issues in corporate governance and business ethics, and explain why studying finance improves your employability. So before we get into this, can anyone just give me an idea of what you think, or your own definition of what finance is? Anybody? Finance.
Well,
Does it
finance,
control the business long term? Oh, sorry, go ahead.
no, you can go ahead, go ahead, go ahead.
Does it control the business income long term?
Sorry, I didn't hear that part. All I hear is long term.
Does it control the business income long term?
How it controls the business income long term. Okay, that's a portion of it. Anyone else? Define finance for us. Oh, also, if I'm talking too fast, if I'm moving too fast, please feel free to slow me down, stop me if you don't understand, and I'll be happy to assist you with that. All right, so definition of finance. Finance is essentially the art and science of managing wealth. It's about making decisions regarding what assets to buy or sell and when to buy or sell those assets. So essentially, when you study finance, you would be looking at all of the factors that contribute to the increase or the decrease of wealth in a society. So when you watch finance, you're looking at the environment and seeing, is this the right time to buy or sell, and what to buy or sell, how much to buy or sell, with the main objective of increasing the wealth of the business or of the product for the stakeholders. All right. So your stakeholders are essentially all those who are owners of the company, whether they are shareholders, whether they are the sole proprietor, whether they are partners in this business. The purpose of finance is to make sure that you preserve and that you increase the wealth that they started the business off with. Because if anybody goes into business, the main objective of the business is to, if they're not making money, if they are a profit-making organization, it is to make enough money to sustain themselves, or to come out of business with more than they came into business with. Or if they are nonprofit, the least that they can do as a finance manager is make sure that they are making enough money to sustain the headcount, sustain the expenses of this nonprofit. Okay, so let's look at the cycle of money. As it relates to the cycle of money, financial intermediaries such as investment and commercial banks assist in the movement of money from lenders to borrowers and back again. This process is called the cycle of money. So the cycle of money is essentially getting money from those who have it and then getting it to those who don't have it. And then over time, the cost of this borrowing or the selling of money is increased by interest rates. Interest rates in banks are determined by what factor? What determines interest rates in banking institutions?
The prime rate, risk.
The prime rate is right, risk. All right. So based on the level of risk that the company determines you are to them, that determines what interest rate you pay on that loan. All right. So your loan is dependent upon how much, and risk, of course, is the probability of loss. If they determine that your probability of loss or your probability of default is very high, then your interest rate will reflect that. All right. If they consider you a safe bet, then your interest rate will also reflect that. So one of the things you would understand and learn is that not everybody who goes into the bank pays the same level of interest or receives the same level of interest based on the assets that they provide to the bank. Okay, so that's essentially the cycle of money. When you look at the cycle of money, you're looking at how money goes into the system and how money comes out of the system. There are several areas of finance, and we're going to go quickly as an overview of these areas. You have corporate finance, which deals with the financial activities that support the acquisition, investment, and repayment of capital. Again, corporate finance deals with the financial activities that support the acquisition of capital, how they get the capital, how they invest the capital, and how they would repay the capital. Number two, another area of finance is investments. It involves the activities centered on buying and selling of financial assets, such as stocks and bonds. So that's another area of finance that you deal with. Corporate finance, like we said, deal with getting capital to do business. Investments, buying and selling of stocks and bonds. The third part of element of finance is financial institutions and markets. This is concerned with the organization, the functioning, and the activities of financial intermediaries and forums that promote the cycle of money. So this is where you have your banks, your credit unions, your trust companies. This is where these people fall into play. All right. Financial institutions and markets also deal with regulators who oversee the entire financial institution or financial market. Okay, because what happens is that these regulators, for instance, your Central Bank of the Bahamas, your Insurance Commission of the Bahamas, the Securities Commission of the Bahamas, based on the kind of financial business you're in, there is a regulator that oversees the kind of business that you do. All right, to make sure that the stakeholders are protected, make sure the customers are protected, and ultimately making sure that the banks are providing and doing safe business. And then finally, you have international finance. This is where you have multinational dealings, country risk, and exchange rate conversions to the other three areas listed, all right, that we spoke about. When it comes to financial markets, these are forums where buyers and sellers of financial assets and commodities meet, all right? So financial markets can be classified by several things. One, the type of asset traded. So based on the kind of asset that is traded on the market, that determines or that names the kind of market that it is. So you have the equity market that trades, of course, equity, which would be your stocks and your shares. You have your debt market that trades what? What is referred to as debt market? For those who may have had some experience in finance before, what is referred to as the debt market? What is traded in the debt market?
Like bonds.
Right. Okay. So if your bonds and your bonds, your treasury stock, which are government released, they are traded in your debt markets, your derivative market. And we'll talk about derivatives later on in the course, but you have your derivatives market. And of course, you have your foreign exchange market. What happens in the foreign exchange market is you would buy foreign exchange low and you would sell it high. All right, that's how you get your money over the spread. When you hear about spread, you're thinking about the difference in what you bought foreign exchange for and what you sold it for. That profit or that loss is considered your spread. All right, so here we go. The maturity of the financial asset. So when you hear terms like money market, that means the maturity of that particular asset in that market is a year or less, okay, 1 year or less. When it comes to the capital market, that has a maturity of 1 year or more. Okay, so once your maturity is less than 1 year, it is traded on what is known as the money market. Once you have a maturity that is more than 1 year, that is traded on the capital market. The third thing that describes markets is the owner of the financial asset that is traded. So you have the primary market and the secondary market. Okay, so just to kind of give you a hint, you would find these stuff on your quizzes, on your tests. Okay, so just if you're taking notes, take kind of copious notes. We good?
Hi, question.
Yes, ma'am.
You're reading from something? Is this in the book that I look at?
I am. I'm gonna give you the slide afterward as well.
Oh, okay, thanks.
Right, but I didn't want to kind of put the slide there and then, yeah. So you're gonna get a slide afterward. All right. So let me see if I can. I'm also going to do my best to send you the book so that you won't have to actually purchase a book. I'm going to send you the book electronically so that you won't have to necessarily purchase a book. All right. Now, based on the edition of the book, it may have a different, it may have a different page number, but it will be the same. 1 second for me. All right. So you have the owner of the financial asset that is traded. The primary market is the issuing company is one party to the trade, and you have the secondary market where the subsequent trading of securities between investors themselves. So let's pause right here. Primary market, secondary market. How many persons in here would have heard about IPOs before, or initial public offerings? Anybody has an idea what they are?
It's the first offering of when a company issues stock.
Right. So this is where they would issue stocks when they come to market. And then, so the secondary market would be, so when they issue them on the market the first time, they would be issued in the primary market as an IPO. After that IPO has been held, then you would have a secondary market where the investors who bought all of the shares of the stock would resell to other persons for profit. Or if the company that issued it wants to purchase those shares back, then they would do that on this secondary market. Okay. And then the fourth area for financial markets is the nature of transaction. That is the dealer make markets where the dealers buy and sell assets for profit, and the auction market where the assets are sold to the highest bidders. All right. So there's various types of markets, and these markets are determined or defined based on not only the assets, but their maturity, also the owners of the financial asset, and the nature of the transaction. Those are the 4 areas or 4 ways that financial markets are defined. You have, as a finance manager, you'll be responsible for several things. Financial management can be defined by capital budgeting, capital structure, and working capital management. Capital budgeting talks about the planning, the evaluation, the selecting, and the managing of these long-term operating projects. Capital structure deals with the means by which a company is financed. So for public companies, usually a mix of stocks and bonds are sold to investors and owners. And then thirdly, working capital management. This manages the day-to-day operating needs of the company. So when you're dealing with finance and financial management, there are 3 areas that you deal with. One, you're either in the part of the finance that deals with the planning and the managing of long-term operating projects. You have capital structure, where you go ahead and you get investments for this company, whether that's putting out issues for stocks or bonds, and then working capital management, where you manage day-to-day financial needs or operating needs of the company. Now, as it relates to getting getting financing from anybody outside in the public, what are the various ways that you can actually raise money for a company?
Is shares, having shares?
You have shares, so you sell shares. And what's the benefit of having shares? Or what's the benefit of offering shares as a company?
You're able to generate capital to start up the business.
Right? But you're also able to do it by bonds, but what's the benefit of doing it by way of shares?
The benefit for the company or the benefit for the shareholder?
For the company. If you were the company, if you were the owner of the company and you offer shares to your company, what's the benefit that can come to you as a owner of the company?
I mean, the only thing I could think of is getting that money at first time, because in the long run, you still have to pay dividends.
Right.
So-
You still pay, you pay dividends based on the kind of shares you offer. So you can offer the preferred shares where you have to pay dividends, or you can offer common shares where you don't necessarily have to pay dividends. But one of the benefits of offering shares is that even though you lose some of the ownership of the company because you're selling ownership of the company when you offer shares, you also share the risk. So instead of you putting up the full $100,000, if you get $50,000 from shareholders, you're only liable now for your $50,000 essentially, because everybody comes into the business knowing that when you come into this business, you run the risk of losing your money as a shareholder. Okay, so what about the benefit? What are the benefits of what's a downfall, I would say, of offering bonds? So you get your money through bonds, but what's the downfall of bonds?
I could
What's
think
it
about the interest rate that changes.
But you offer the bonds, so you kind of control the interest rate. So what's the benefit? What's the downfall of you offering bonds for your company?
You still would have
You have
to
to pay them
pay
back.
the
Right.
interest rate no matter whether you win or lose.
Correct. Right. So if you, no matter how the company is doing, you still have to pay back the interest rate because a bond is essentially a loan. Okay. And what's the downfall? There's another way to raise money. That's private equity. That's equity that you put up. What's the downfall of offering your own equity? So you can have full ownership of the business because you put in your money, but what's the downfall of that?
You would absorb all the risk.
Correct. All right. So there are various ways to get money, but there are pros and cons of whatever way that you choose to raise money for the company. All right. But we'll jump over this. We'll jump over these sections. I'll allow you to read that yourself. Objective of the finance manager. Oh no, let's talk about the objective of the finance manager. So essentially what is going to happen is one of the ways that we would send homework for you or a project to you is that I would expect to see your problem solving or your decision making capabilities. All right. So there may be a part of your turn-in paper where you would be sitting in the seat of a finance manager and you would have to make decisions and you would have to justify why you make the decisions. Now, whether that's right or wrong determines your rationale for why you made that decision. So it could be a not so wise decision on the face of it, but if you can provide adequate quality rationale why you made that decision, then you'll get the points. Just saying. Now, if you can't back up what you did and it's a bad mistake, I mean, it's a bad decision, then of course it'll be wrong. All right. But anyway, there are several objectives of the finance manager. One, the finance manager is hired for profit maximization. Okay. The finance manager is hired for profit maximization. Second thing that the finance manager is hired for is to maximize the current share price. So when the finance manager is hired by the company, one of their jobs is to make sure that your current share price is increased or maximized. Thirdly, they're expected to maximize the equity value. What's the difference between maximizing current share price and maximizing equity value? What's the difference between maximizing current share price and maximizing equity value? Anybody? Okay, we'll explain it. Okay, so when you maximize your current share price, it means then that the share price or the ability or the value in terms of ownership for the stakeholder is increased. All right, so the actions that must be taken to raise current stock prices often end up benefiting other stakeholders as well. All right, so when you maximize your current share price, it means then that you're meeting one of your main goals, which is to lead to a trade-off. Okay, which means then that the stakeholder or the shareholder increases in value, as well as every other stakeholder in the business. So the employees get a part of that. Also, the neighboring community gets a part of that. Also, those who are in the government gets a part of that, because as that increases, so do taxes increase. All right, so everybody wins. Now, when you talk about maximizing your equity value, in the case where they are privately held firms, so publicly held firms, they focus on increasing share price because that's how they gauge that they're making money. But for privately held firms, the entire value of the company increases. And this is what it talks about when it comes to maximizing equity value. So when you hear those two terms of current share price and equity value deals with privately held firms, and current share price deals with publicly held firms. So we're dealing now with the legal forms of business. What are the different legal forms of business? You're going to see this listing, but I want to get your feedback. So I just want you to answer it. You can be right, you can be wrong, but I just want to get you to start mulling this over. When it comes to sole proprietorship, what are some advantages of having a sole proprietorship?
What you earn is totally yours. You don't have to split it with anyone else.
Correct. Anything else? What are the other advantages?
It's an easy startup process.
Easy startup process. Correct. Anyone else? What's the benefit of having your own business? Go ahead.
I was saying tax purposes.
Tax purposes, right? Tax purposes. And then it's the least regulated as well. Okay. What are some disadvantages of having your own business?
You assume all the risk.
You assume all the risk.
You can be held personally liable for the failure of the business.
Correct. What about the life of the business?
If you die, the business dies.
Correct. All right. So those are some of the advantages and disadvantages of a sole proprietorship. When it comes to partnership, what are some of the advantages of having a partnership?
Shared risk.
Shared risk. What else?
If one of the owners passes, then the other person would take full ownership.
Correct. What about capital?
Costs.
Shared costs, right? So you share the cost, and what else? What's on the flip side of that as well?
You share the profits.
You share the profits, but also you have a larger amount of capital. So the more people joining, the more capital you have to start your business. What are some of the disadvantages of partnerships?
You cannot make your own decision.
Correct. You cannot make your own decisions. Anything else? if there is no proper layout or delineation in the agreement, what can happen as relates to assets?
That what they would have to go to court and sort it out.
That can happen. That can happen. But when it comes to your assets and if you don't delineate in there what happens with your assets, what does it mean? It means then too that with your partners, some of your personal assets can be commingled with business assets, because sometimes with partnerships, to make sure that the business survives, they would say, you know what, I'm going to lend you 20, I'm going to lend you out of my personal money, 20 grand, just to make sure that this stays open this month. Now, if the company flops, you lose your 20 grand, but that's your personal asset that you put in there in the partnership pool. All right. So that's one of the disadvantages. And also it's difficult to transfer ownership. So just because you are the owner in the company, if it's not clearly delineated, it doesn't mean that you can necessarily pass this down to your next of kin. Because you are in a partnership with other people, they'd have to agree to that. Okay, so that's another disadvantage of it. When it comes to corporations, what are the benefits of having a corporation? Oh, also in the United States, for partnerships, whenever you make profits, that's not counted on the business. Even though the business is a private entity, your profits are treated as personal income for tax purposes. All right? Your profits are treated as personal income for tax purposes. For corporations, what are the benefits or what are the advantages of opening a corporation?
The business is perpetual. It doesn't die.
It's perpetual. Okay. Anyone else? That's correct. It doesn't die.
You could distribute shares and raise capital.
You can do it with partnerships and sole proprietorships as well.
Mhm.
So what about the transferring ownership? How easy or hard is that?
It's easy. You just sell your shares.
You just sell your shares to somebody else, right? You just write it off and you sell it to somebody else. All right. Profits on the other hand for corporations can be taxed at capital gains rate for owners. So it means then that it's not counted as because the corporation is a separate entity, it's not counted to the owner as personal income, but you will be taxed on capital gains. Anybody want to take a stab at what capital gains tax is?
I think it's like the difference in the share price, what you got it for and what you sell it at.
Correct. So any uptick in the value of your share or the value of your ownership between the time you bought it and the time you sell it, that increase is also taxed by the government. Okay. Now, for disadvantages, what are some disadvantages of a corporation?
They're expensive to form. They're heavily regulated.
Right. They have double taxation of the company profits. So it's first tax at the company level and then tax at the owners when distributed. It's often the most regulated form of business. Why is that?
Because sometimes the business can have complex structures.
And what does that mean?
Like it could get like parts of businesses could own another business, and then like hidden owners, like ownership can get lost in the trail.
Right, and which can also be which can also aid in money laundering. It can also aid in tax evasion. It can also aid in terrorist financing. So you want to make sure that you know who the business owners are and you want to make sure that they are doing things above board. When it speaks to the agency model, what does it mean to be what's the agency relationship? Let's put it like that. When you have the term agency relationship as it relates to businesses, what comes to your mind? Let's hear from someone we haven't heard from in a minute. Leslie or Monique or Heidi?
I'm here. I just don't know any of the answers.
No problem. I got you. No, it could be a minute. Trust me, it'll be a minute. But we got you. We got you. So I don't think we heard from Leslie, Heidi, and Monique when we were doing our introductions. Just give us your name, where you work, if this is your first time in a finance course.
Hi, so I'm Leslie Archer. I'm a policy fellow with the Government and Public Policy Institute at the University of the Bahamas. My background is in, I guess, research, humanities more or less, but I'm shifting over, I guess, career-wise. I need to get my feet wet into finance.
Finance, gotcha. Okay, not a problem.
Good night. My
Good
name
night.
is Heidi Pratt. Finance is new to me. I'm at Fidelity Bank, Federal Street branch, and I'm a customer service officer there.
Gotcha. Okay. And Monique.
Good night. My name is Monique Smith, and finance is new to me, but I'm not working. And
Okay.
yeah, that's it.
Not a problem. Crystal, we hear from you also, right? We already hear from you.
I am Crystal Morris. Finance is not new to me.
Oh, okay.
At Fidelity Bank, I'm the client relationship manager there.
Gotcha. Frederick Street as well?
Yes.
Okay, got you. All right. So welcome to Intro to Finance. Dino Cartwright, 15 years in the financial services industry, in commercial banking, as well as I'm a regulator. I got my feet wet at Commonwealth Bank, but I spent the majority of my commercial banking career at Fidelity, Frederick Street branch, then Wolf Road, and then went on to Central Bank. So ended my career at Fidelity in compliance, audit, and then went to Central Bank as a regulator, then went over to Scotiabank as a compliance manager. All right. But when it comes to agency relationships and in business, what does that mean? Well, anyone, you can take a stab at it. When you have about agency relationships. I'll break it down a little bit. You have an agency relationship, you have principal and you have the agent. All right. Who in the relationship is the principal?
The seller?
Not really the seller, but when you talk about a business, when you have a business, who in the business is a principal?
The contractor.
Not really the contractor, not really the customer. The
The
principal
owner?
would be the owner, right? So the owner. The agent would be whom?
And I guess the agent will have to be the bank or the institution.
No. Who is the agent as a person?
I don't know.
No problem. Anybody else want to take a stab at it? You talk about agent and you're talking about principal.
The person that's carrying out the job.
Correct. All right. So the person, anybody who is not the owner of the company is an agent, right? So what are some problems that the principal agent can face in the company? So principal dash agent. What's the problem with what's the issue that can surface between principal and agent?
Wages.
Wages. Okay. And what problem can that cause?
The agent wouldn't want to work no more.
Right. So the agent wouldn't work no more. That would lead to what? Sometimes
Termination of contract.
But before the termination of the contract, what can lead to termination of contract?
Lack of the duties completed.
Right. So you ain't paying me, I ain't doing the work. First
Yeah.
problem. Second problem, you ain't paying me. All right. If you ain't paying me, I'm gonna start giving out some of your products, which means that you lose on the back end. Thirdly, if you're in the bank, you're an agent, the bank can't pay you bonus for X amount of years. So you say, you know what? Whatever you want, client, you're gonna get. All right. So if they charge a fee, well, they don't use passbooks anymore. So if they charge a fee, we'll waive that fee. If it costs you, if the bank tells you, all right, if you want to move your loan from here to there and they have to pay for the printout, forget that. I just print out for you. You could go and carry business, because what happens is when the principal is not operating in best faith or best practice as it relates to the agent, then that causes a problem. Another issue may be information asymmetry. Information asymmetry is one of the in that relationship is holding back information from the other party. So the principal could be holding back information that benefits or that advances the agent, and the agent may be holding back information that can benefit the principal. What's some information that the agent can hold back from the principal? Anybody can answer. Sorry, did someone answer? What's some of the information that the agent can hold back from the principal that is considered vital? Let's go. Kendra, Renique, Rashay.
Like if they have other debt or something?
Right. So let's look at it from that aspect. When it comes to principal agent, we can also look in the terms of the bank and their client. The client can hold back some information that they are not disclosing. And so what are some ways that they can get around that?
Well, I know now we have the credit score system, but I
Right.
think they still aren't hooked up to the little mom and pop lending places
What do
yet.
you call mom and pop?
Pardon me?
What do you call mom and pop?
Like the private, well, every place is a private lender really, like
Mhm.
the small, like maybe the smaller lending companies aren't fully registered onto the,
Got
the
you.
larger credit system scoring thing yet.
So who's a part of it now?
The banks are a part of it,
Mhm.
as far as I know. But like, for example, if you want to borrow money from, I mean, I don't know how it works, but you see, like what
Easy
is it
payday
called?
loans, right? Easy
Payday
payday
loans and
loans,
stuff
right?
like they aren't fully integrated. So I could have some payday loans out and it not be known because
Correct.
my credit score is only showing what I have with the bank and I may
With the
not have
commercial
any
banks.
history
Correct.
with the banks.
Got you.
So that's information I could hide as
Got
the
you.
agent.
Okay. So when you hear about agency, you also have the agency theory, which is the name given to the processes surrounding recognition of the principal agent problems and ways to align agents with the interests of the principals. What are some ways that you can align the agents' interest with the principals?
Incentives of sorts.
And how do incentives work? What kind of incentives?
If you promise to give us all of the information, we'll reduce your interest rate or something like that.
So
Or
as it relates to agents, how do we get employees to be faithful or committed to the employer?
probably professional development. If you pay for their professional development and encourage them to, yeah, professional development would be one way. I think you could get employees to stay. Also, I think with my first company out of college, if you stayed a certain number of years, you automatically get shares in
Okay.
the company.
Okay.
So they encourage you, and then when they hired you, they said it was their culture is a hire to retire culture.
Okay.
So that kind of encourages you already, that if they actually choose you, that they really want you to be, then they're willing to groom you and shape you and support you. So like
Gotcha.
the culture, giving you shares, and encouraging professional development.
Okay. How many persons here would have heard about corporate governance? Particularly Sarbanes-Oxley Act of 2002. But how many persons here had heard about corporate governance? What is corporate governance? Gonna circle back to Rashay, Kendra, Branique, Cardia.
That's like the rules of how a company should be run,
Right.
or the principles at least that they should abide by, ethics and all.
Correct. So your corporate governance deals with how a company conducts its business and implements controls to ensure proper procedures and ethical behavior. When you hear words like controls, what does that mean? What are controls as it relates to business or to banking or to finance? When you're a finance manager, you hear a lot of terms like controls. What comes to your mind?
It's a system of structure
Mhm.
to make sure that what's done is supposed to be done correctly each time. So it would be a control.
So what are some examples of controls?
Like a manager would be I would say a manager would be a control for employees.
What gives the manager control?
What's the word? They're
Or what does the manager use as a tool for control is such a strong because it sounds like slavery. What tools do the managers have that help them to put in place controls to protect the business?
power.
Sorry?
Power.
And power is given to them by what?
Their position.
Their position is given to them by what?
But how they perform?
Yeah, like performance evaluations.
Performance evaluations can be a control. That can be a control. And what dictates the performance evaluation?
Goals
Some
and
other P
objectives.
words. Rules and objectives, which are found in what?
No, I mean the goals and
Procedures.
assessments. Job description.
The policies and procedures of a company.
So you have the policies and procedures, right? So your policies and your procedures and your code of conduct and your manuals help to shape the controls that are put in place. Controls are put in place to mitigate risk. When you hear about mitigating risk, you're talking about what?
Reducing as much loss as possible.
Right, reducing as much loss as possible. When it comes to risk, what are 3 things that you can do with risk? Because everything has an inherent risk. Everything has an inherent risk, right? There are 3 things you do to risk. 3 or 4? 3. Let's deal with 3. What are 3 things that you can do with risk?
Reduce it.
Correct. To reduce the risk or to reduce the effects of the risk. Because really what you're trying to do is the risk is something that can happen. But what do you do to reduce the effects to the company or to people in the company if this risk would have happened? What's the first thing? A, it's an A word.
Assess.
You say assess or?
Mhm.
Okay, you can assess, you will assess the risk. So your assessment of the risk will lead to these 3 decisions. You can accept the risk, you can transfer the
Reject.
risk, or you can reject the risk, right? You can accept the risk, transfer the risk, reject the risk. To accept the risk means what?
That you okay with the consequences of
Correct.
whatever that is?
Correct. And when you're okay with the consequences of it, that means what? I wish I could draw a thing on the whiteboard. Normally, at this point, I would draw on the whiteboard. There, you have in the x-axis, you have the how do I put it? The cost factor. No, sorry. In the x-axis, it has the frequency of that thing happening, or the probability that that thing happens. And the y-axis, you have the cost of that thing happening. So if this happens, this is the probability is going to happen. Up here is the cost, okay? If it happens frequently, but the cost is low, what would you do with that? What would you do with that? Would you accept it or reject it?
Absorb it. I mean, accept it.
So if it happens frequently, but the cost is low, you accept it.
I mean, I don't know. You could accept it, or you could fix it. I don't know. It depends.
You can accept it, which means then that you just factor in this cost. That's going to happen a lot.
Prices.
But I'm just gonna. Sorry.
Factor it into your prices.
Right. You factor into your prices. You factor it into your
Transfer it.
cost structure and that kind of stuff. Or you can reject it because this may cost too much. It may run your cost up too much. All right. Okay. So let's do another scenario. What if the frequency of it happening is low, but the cost if it happens is high? What did you do? Frequency is low, cost of it happening is high. What would you do?
Plan for it.
You plan for it. And what else? How do you plan for it?
Setting the money aside for it.
But it's expensive.
I know.
Yeah, you have the choice to accept it, reject it, or transfer it. And bearing in mind, this is one of your functions that is critical to your business.
I guess you got to accept it.
But if you accept it, it could cause you to get bankrupt.
Oh, bankrupt, then you reject it.
But if you reject it, you shut down because this is critical to your business.
So who you can transfer that expensive cost to?
When you're about transferring risk, what do you call that?
Put it on somebody else.
And what do you call that?
What agency? Is that what you're trying to get at? I don't know.
No, it's an I word. I mean, you know it. If you okay, but like this, you jump in your car, right? You get in an accident.
Insurance.
There you go. Right? So you transfer your risk by insurance, right? So what happens is, because this is critical to your business, for instance, if you are a lawyer, you would have what they call, I just had it at the tip of my tongue. If you're a lawyer, you make decisions on behalf of people. If you're a financial person, you make decisions on behalf of people. The cost of them, you making the wrong decision, could cause them to be bankrupt. So what happens is you have this thing called indemnity insurance, meaning then that if I mess up and I give you wrong advice, you lose money, you don't come after me, I let my insurance pay it. So I transfer the risk to them. Okay. When it comes to larger companies that have exorbitant risk, one insurance company may not be able to, or may not want to handle all of that. For instance, for oil leaks can run you into the billions of dollars. One insurance company can't do it. So they have these things called reinsurance companies, which means then they now take your insurance and they split it between 5 people. So you have a consortium. They take your $1 billion insurance and trade it among themselves that everybody gets $200 million. So in the event of an accident, they're only out $200 million each when your insurance comes to $1 billion, all right? So that's what you do with your insurance, and that's what you do as it relates to mitigating risk, all right? When you go back to corporate governance, you're talking about how a company conducts its business and implements controls to ensure proper procedures are done. So the Sarbanes-Oxley Act, or the SOX Act of 2002, I want you to remember this, take notes on this, underline, highlight, italicize, whatever you need to do. The Sarbanes-Oxley Act of 2002 requires 3 things particularly. The 3 top things are that the CEO and the CFO attest to the fairness of the financial reports. So your CEO and CFO attest to this, which means then that if there's somebody lying, they are personally liable. Okay. 2, the company maintains an effective internal control structure around financial reporting. So they have strong controls as it relates to financial reporting. And then 3, the company and its auditors assess the effectiveness of the controls over the most recent years. So the company must have external auditors also in place to assess or do external audits of the controls of the company. That's corporate governance. And because this is your first day, and because I'm done with my slides, I will forward these to you by email. But you have a short day today. So we'll end class right here. Is everybody in the WhatsApp group? I want to make sure everybody is here. I want to make sure everybody has access also to Moodle, so that you can, this is how we send the information. Leslie, if you can send me your information, please, privately. Cardia, I got it. Okay, I've got that. So you should see something from me. Leslie, Cardia, everybody else is in the group. Like we said, also, there are some homework assignments that will be sent via WhatsApp. So please pay attention to that, pay attention to your emails. And you will also, for those who came in a bit late, our tests and our exams will be on Moodle. All right. And the class is hybrid, the class can be hybrid, well, is hybrid as well. So there may be times that we may go into class just to do tests or to do quizzes. So just please bear that in mind as well. It won't be frequent, but just for the event of invigilating exams, or in the event that there's something that has to be done in person, then we'll let you know before time when we'll be going to the classroom. Okay, outside of that, we'll maintain the online presence. All right, so let me just make sure I have everybody here and everybody is signed up so you can get that. Please make sure that you sign into your what do you call it? Make sure that you sign into your Moodle, because once I say everybody sign in, you will be starting getting homework assignments via Moodle. All right. As it relates to this, your final exam is 40% of the class. Your midterm exam is 20%, and your homework assignments and your quizzes make up the other 40%. All right, so your final is 40, 20% is your midterm, 20% is, sorry, let me back it up. 20% is a project. I will let you know the project that you'll be doing. 20% is your project, 20% is your midterm, 20% are your homework assignments and quizzes, and 40% is your final exam. All hearts and minds are cleared. We good?
I think I'll be a little better once I get slides.
Yeah, okay. If anybody has any questions, please let me know. We'll be happy to help. If you have any question, you can put it in the WhatsApp group, and I believe in the collaborative sharing. So someone else may have an answer for you, so you can get that right there. Okay. Would it be best to send the what do you call it? The handouts. It would be best to send them by email or send them by WhatsApp.
I prefer emails.
Me
Email.
too. Email.
Email? Okay, not a problem. All right. And if you have any question, go ahead. Sorry.
I probably can send you a message I need to change. I see you sending it to the wrong email. I mean, I have access to it, but I would prefer to use my next email address.
Okay, no problem.
That email to you.
Not a problem. You can just let me know. You can message me. Let me know.
I have a question. Are we able to get the slides before the class starts so we can follow better?
Sure. How much you paying? Don't matter. Just joking. I guess that see what happened was, right? What had happened was, hold on, Miguel, you recording? Good. Okay. What had happened was we were just gonna have the intro today and then go home. But I didn't want to disadvantage you by not at least giving you some meat today. All right. So you will be getting that, as well as I will shoot you some of the other slides. Matter of fact, what I'm going to do today is I'm going to send you all of the slides. So if you need to print them off, I guess you can print them off. If you need to put them in your tablet or whatever, you can do that. All right. But that's what I'm going to do. I'm going to send you all of these slides tonight. So I want to make sure that I have everybody's email address. Now, on my listing for email addresses before you leave, Leslie and Cardia, for some reason, I don't see you on WhatsApp. If you could do me a favor.
I didn't get it.
No, right?
No.
My email, my phone contact is 803-7116. 803-7116. If you are not in the WhatsApp group, please send me a WhatsApp. That's where I'll add you to my listing, and then I'll add you to the group. All right, because for some reason I added you as a regular contact, but I'm not seeing you show up to add you to the group. So 803-7116 is my contact, and then you can just please shoot me an email with your name, and then we'll add you to the WhatsApp group. Another thing is Moodle. Let me tell you the names that I have on my listing. If we don't hear your name, please let me know. Please also send me your email address so that I can add you to my listing. Okay. From the school, I got these names.
While you calling the names, you could just say your number again, 803-7119.
6.
716, okay.
Correct. Okay, so you have Branique, Rashay, Kendra, Crystal, Heidi, and Ormonique. All right, so if you didn't hear your name, if you could send me your email address, I'm gonna take it down right now. You can just put it in the chat right here in the chat, and I will, or you can send it by that contact, and then I'll add your name so that you can make sure you get your handouts tonight. Okay, got you. Now, I also, what I prefer is, I know that persons normally send their work emails, but sometimes we send emails at night, or we send emails on the weekend. And so you may not see it in time. So if you prefer, or if you have a personal email, you can send it there so that you can always have access to it. All right. That'll work perfectly for us. Let me see whose name I didn't get. Crystal Morris. I don't have your I don't have any of your connections as well. Crystal Morris. Okay, so I'm gonna send you that. You can look out in your emails for those things tonight, and please, if you can, check your emails from Moodle, and let me know if you don't have it there. You can let me know, and I will do my best to send you another email address. I'll have to change your email. Sorry, as you requested, Ms. Bain, I'll change your email in the Moodle as well, because that's where you will be getting your updates. So I'll change everything in there as well. All right.
Okay, thank you.
Not a problem. All right. Thank you all, everybody. Have a great night. I'll be please look out for emails from me. Since you already completed part 1, you may be getting homework before the week is out. All right. So please check your emails. Thank you, everyone. Have a great night.
Good night.